All right, greetings everyone. We're so pleased to see all of our live participants with us this evening, or whatever time it is in your part of the world. And welcome to GPA Trading Services. And I am your host and co-host and co-founder of GPA Trading Services, Trish Albrecht. In honor of summer, we thought we'd share a photo of us at the beach. And we do hope everyone is having a very pleasant summer and you're able to have some fun and relax and enjoy yourselves during these nice summer months. And tonight we're going to do a Sunday market review, which is always nice to look at the markets before the big trading week begins. And while we do our market review, we're going to go over and illustrate some of the trading strategies and our state-of-the-art custom software that we use to trade the markets, analyze the markets, get in and out of the markets, manage the markets. We do it all. And we'll go over that process with you. All right, and then we'll look at the charts and see what's happening and what's ahead. So again, I appreciate that you joined us, and I'm going to go ahead and turn it over to Gary in just a moment, and he'll go over analyzing and the strategies and the software with you. And if you have any questions, you can type those in and I'll be happy to answer those for you. All right? So, as we always like to say in our classes and our webinars, please sit back, relax, and enjoy the ride, as we have a lot to cover. And thanks again.
Greetings, everyone. Hi, my name is Gary R. Albrecht. I'm the founder and CEO of GPA Trading Services. I'm the creator and mastermind behind the Market Price Anticipator Premium Edition 3 software. I'm also the educator and the instructor. Just a brief bio. I've been a professional trader for 20 plus years successfully. I'm a technical analysis expert. I'm the creator of that one-of-a-kind custom trading software we're going to reveal tonight. I'm also the founder of GPA Trading Services over 8 years ago. We've been educating thousands of students around the world, and we conduct live events, speaking engagements, platinum program, and we also offer one-on-one coaching and mentorships. If you haven't had a chance to peruse our website, we recommend you do so. We're going to go over this evening the analyzing the markets from a multi-time frame perspective. And before we get into that, just a brief disclaimer. I'll go ahead and highlight a few points. Trading is not suitable for all people. Some markets are leveraged, and therefore it is possible to lose money deposited for a position. A person should only use funds that they can afford to lose and that fits within their overall financial plan as developed by a qualified financial planner. We recommend you never risk more than 2% of your entire account balance on any one given trade. For options friends, we recommend that you never risk more than 5% of your entire account balance on any one given options trade. Always adhere to strict proper money management. It's critical. Finally, all information in this presentation is for your educational purposes and should not be taken as investment advice, nor as a recommendation or endorsement to buy or sell any specific investment. You're going to be trading at your own risk. Now, just a couple of components that's important when you're anticipating market conditions, whether you're getting in a trade long or short. You need to understand support and resistance. The trend direction is very important. Utilizing the multiple time frames is going to be the key, and then to align those time frames together is the magic. And of course, understanding how the lower time frames cycle within the larger time frames, as we like to refer to it as the line of progression. And we'll review that real briefly before we start doing our market review. And just to give you a visual picture of what that looks like, let me pull up my big cursor for demonstration purposes. And what we're trying to accomplish is aligning the time frames. And notice what that means. You can see with these little red boxes, we have 3 different time frames on the same asset class. This is oil. And you can see when we start getting overbought, these indicators end up in the upper quadrant, both the trend momentum and the price action. You'll notice on the weekly, not only is the monthly overbought turning over, but the weekly's overbought and extremely overbought conditions, and then as well as the daily. So this is what we mean by aligning the time frames, when the daily, the weekly, the monthly are aligned. Well, that's for longer term trading. What if I'm a scalper? Then you can align the lower time frames like the 5, the 15, the 30, the 1 hour, the 4 hour, etc. So depending on the type of trading personality you have, you would align the time frame, whether you're scalping, day trading, investment trading, etc. You just align the higher time frames the longer you plan on being in that position. And notice as we go through this next example, here it is with oil showing we were deeply overbought on the weekly, both the price action indicator and the trend momentum. And then as you see the daily, you can see that the daily is overbought as well, and it started to move lower, but then it started this stair-stepping process. And if you take a moment and ask yourself, what is price action always actually doing? Ebb and flow of the market, you hear the term. It's the buyers versus sellers in the market. As they come in, there's more sellers when price goes down. There's more buyers when price goes up. But it's the ebb and flow of the market. Notice how this software follows the ebb and flow through a phenomenon we call slingshotting. It's where the time frames separate and go, in this case, the daily, the weekly, and the monthly are going down, but eventually the daily is going to want to cycle up against the weekly down, the monthly down, and that's what causes this slingshot phenomenon. And we see this repeat over and over and over. And I'm going to show you this again, so it's just a brief introduction, but you can see this process of slingshotting occurs over and over and over. So this is an easy way when we know when a long-term downtrend, the way oil is right now with a monthly and a weekly down, we can start to sell these daily slingshots lower and lower and lower, while that weekly is continuing to cycle from overbought toward oversold. And the price action indicator moves from overbought towards oversold. And this idea is known in advance. Why? We're going to show you that. When we get a weekly to hook and cross, we call this the hook cross pattern, it forces the daily to cycle from overbought to oversold. And then as the weekly continues to navigate from overbought toward oversold, the daily is expected to exhibit this slingshot phenomenon over and over. But basically you'll hear the term, hey, in a downtrend you want to sell the rally. Well, when is a rally, definition of that rally, and when do we sell it? When does it occur and when do we sell it? It occurs when the opposite time frame, in this case the daily, is racing off against the downtrend, and then when it reverses and joins forces back with the weekly, the monthly, you sell the daily slingshot or sell the rally in that downtrend. And this works on all time frames. So if you're a scalper, you could be selling the rally on a 5-minute and going in the direction of, say, the 1 hour, and sell 15-minute slingshots, 5-minute slingshots. All right, here's another example with the currency pair. And again, this is the pound dollar, very common currency. And you'll notice we have a monthly that's developing in oversold conditions. It was overbought, came all the way down, and we're expecting this big bounce because the monthly was oversold, starting to turn up. And we knew that this was expected to reverse because the weekly was already starting to reverse. And notice what I mean by that hook and cross pattern. You'll see here on the weekly, we also got this little hook and a cross pattern. We call that the PAI hook, price action indicator, or PAI for short. PAI hook, trend momentum cross. And notice when the weekly barely starts to hook and cross, it means something. It means this daily is going to run from oversold all the way to overbought. So that tells me when I see a weekly show a hook pattern that the daily is expected to cycle towards overbought and price is expected to go higher. So notice what the daily did. The daily went from oversold towards overbought on cue, but I wanted to call this out to your attention. Before the daily came down and turned and hooked, we were expecting the weekly was going to finish this down cycle, right, and then start to turn up. So what happened? Remember that slingshot phenomenon? We were able to sell the rallies in a downtrend until the daily was ready the weekly and the monthly, became ready in oversold territory before we then bought this rally. But early on with the 4-hour, we were able to sell the slingshot lower. So while my daily was still down, we expected the 4-hour would cycle, and then once it started to cycle up, the 4-hour would do what? It would slingshot higher and higher and higher. You see these little lines illustrating this where I'm showing you with the cursor, and that is because of here. All I knew is when I saw the daily hook and cross, I knew this 4-hour would cycle to overbought. And because I had a weekly with a hook and a cross, that meant this daily would finish the cycle. And as the daily would finish the cycle, the 4-hour was exhibiting the behavior that it would cycle to overbought territory, then slingshot higher, higher, and higher as price kept stair-stepping higher, aka we're expecting a big bounce because the monthly, the weekly, the daily were all oversold. And we bought that initially, and then when the 4-hour got overbought, we expected it would slingshot higher and higher because the daily still going up, the weekly still going up, and the monthly starting. So that's it. Very simple. It's just to align those time frames. Well, guess what? We went further to show, and this is just another example of gold. We trade all asset classes. So here's an example of gold where gold was starting to bounce early, but it started to pull back on the higher time frame. It was bouncing and it pulled back, but we expected to catch that rally because we were expecting this to continue to stair step higher. So notice as the time frames were aligning, the monthly's in oversold territory expecting a bounce. The weekly was oversold expecting a bounce. The daily was oversold expecting a bounce. And the 4-hour was in the same area. So this is an example where we expected the bounce would occur, but not until after the day turned up. And my weekly was oversold, my monthly was oversold. Both were in oversold territory. But while we were waiting to buy that initial bounce, we knew we were going to get a little bit of a pullback to the downside because the daily was still heading lower at the time, and we were waiting to buy the dip in that overall uptrend. So notice on the lower time frame, we were able to sell the rally down until the daily finally flipped and turned up. So we were able to get a couple of slingshots lower and lower. Then we reversed, and notice you get a trigger that tells you, hey, it's time to buy and go long, and you look for your turn and hook and cross pattern, and that is a beautiful example of a much higher move. And this is what we're going to show you, the example of these trades and how they turned out. All right, so I think you get the point. All we're trying to do is align the software, these indicators, where they all go in oversold or overbought together. In this case, it was oversold, 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 oversold. All in alignment. That's why this software is unique. It automatically aligns the time frames. So guess what? Ladies and gentlemen, we discovered that in order for this daily to turn and hook, it wouldn't do so and turn and hook and do this hook and cross pattern we've been discussing without the time frames being aligned. So we were able to program this to line up so that the daily would never turn up and hook upwards from oversold unless the lower time frames were in agreement. Well, this works on all time frames. When a weekly turns and hooks, that means the daily is in an oversold moving upwards direction. And when it turns and hooks from overbought heading lower, it means the daily's overbought heading lower. And the same for the monthly. The monthly started to turn, but it was pulling back at the time. That's why we knew we had a little bit of a pullback first to align the time frames, then buy that bounce. So we automated all this for everyone's ease and convenience. Now let's go live to the chart so we can see what we're discussing, but now put it technically on a chart. And let's start off with gold. Everybody seems to be interested in gold. Why is gold pulling back? How much further is gold going to go down before it bounces? We're expecting we're in the early stages of gold bottoming out because we have multiple time frames in oversold territory. Notice the weekly. It's oversold, deeply oversold. And remember what the gold is trying to do. We're trying to get the PAI indicator, price action indicator, and the trend momentum indicator in the same area. So you either want them both overbought, looking for a sell, or both oversold, looking for a buy. That's simple. When they're overbought together, you look to sell. When they're oversold together, you look to buy. Now, add in the fact that we know that when this weekly starts to hook up, it means my daily is already turning and crossing. And because this actually hooks during the period, it means the daily is already in alignment with the weekly. In other words, if the daily was still headed down and the weekly would not turn up, it doesn't turn up until the daily is starting to cross up. So notice this little red line. I'm going to bring it to where the weekly starts to cross up. Notice it was flat, then it turns and starts to hook, and we not only hook, but we start to cross on the trend momentum a little bit later. It's by design. The PAI is going to hook first, and then the trend momentum will follow. Why is that important? Notice when we got the hook pattern, even before we officially had the cross pattern, it's going to mean, and I'm going to keep your eyes on this level when I change it to the daily. It means when you get a hook and cross pattern on the weekly, the daily is going to run all the way to overbought. Well, guess what? When the weekly starts to hook here, the daily's got a long way to go, day after day after day after day after day, to make that cycle. So notice what the daily does for us when we finally get that hook pattern. And I'll turn my auto scroll off and go back in time to show that to you. And from this weekly, you can see we're in overbought territory. And then when we go to the daily, let me remove these other ones so we can keep our eyes focused at the lesson at hand. But this is interesting when it starts to set up like this, that we have the ability to anticipate future market conditions before they happen. And I'm going to remove this one so we can focus on the up move first. So here we have on the weekly the one red line across the chart. There's no other ones. So when I flip back to the daily, you'll see where the daily was oversold. And as this hook, you'll see the daily give us several days of upside pressure. Now let me switch to the daily, and I'll bring this back to that level and scroll back till we see our line. 1 second while we get back there. But notice that the daily was oversold as well. So we knew gold was expecting to have a big bounce because, again, this is why we believe gold's going to start bouncing in the next several days to several weeks coming, because we're in the same boat again. So we started to turn and hook, and notice what the daily did after the weekly cross, which would be the right side of this line. The daily moved what? Day after 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 day higher. Yeah, a couple of those days were red candles, but the daily still did what the crossover said it was going to do. It would go from oversold into overbought. Well, how did we know once the daily got overbought it would keep slingshotting higher and higher and higher? Well, that's the behavior you would expect the daily to exhibit when the weekly's moving up. And notice what I was saying about earlier. Price always stair steps because the time frames are always going with the move, against the move, with the move, against the move, with the move, against the move, with the move, against the move. That's all this is in this setup, is the time frame cycling against the higher time frame. And what was the higher? The weekly was going up. The monthly was going up. So we expected gold to have a huge bounce. And that's exactly what happened. And we're going to show you some trades that we actually took based on that. And we made like $150 up and $110 down, or it's vice versa. But we made over a $100 move in each direction just following the alignment. All right, so let's continue. So why is gold expected to go further? Well, notice, and we're expecting a bounce. But I said it's in the early stages of setting up. The weekly is still down. Notice it hasn't hooked yet. It won't hook until the daily is getting started. It won't hook. So once we finally get that hook and the cross, what's it going to mean? It means the daily that's oversold is going to move all the way to overbought like it did the last time. All we need is this hook. So that's why we're telling you gold is getting close to a major bounce. Well, what if I told you that not only when I get a hook pattern, it means the lower time frames are in agreement, and when you get this hook and cross follow through pattern, that it means the lower time frame, in the case of this weekly time frame, W1, the daily is going to move to overbought. Well, what happens when this hooks again in the near future? It means the daily is going to cycle all the way to overbought like the last time the weekly hooked. So that means we're going to have a Fibonacci retracement coming on. Well, look at the magic of this. what does a Fibonacci sweet spot? It is where you get your swing point high to swing point low and your Fibonacci retracement going to a 38.2, a 50, or a 61.8. If you're familiar with Fibos, you know there are other ones, including a 23, then your 78, 88. There are other Fibos in here. But the sweet spot is considered a 38.2, a 50, and a 61.8. Why this the sweet spot? Well, basically because of all Fibonacci retracements, if you take every trade where Fibonacci retraces, the vast majority will make up a 38.50 to a 61.8. What does that mean? That means more will go into this area than a 23 and reverse down, than a 78 up here and reversing down, then an 88 up here and reversing down. It means the higher percentage is going to go in this area. Well, we've also programmed our software to do exactly that. When I get a hook and a cross pattern A, it means my lower time frame is going to make that full cycle. And when it hooks down, it means my time frame is going to make the full cycle down. Right? So when my weekly hooks, who goes all the way? The daily. When a monthly hook, who goes all the way? The weekly goes up. When a daily hooks, who goes all the way? The 4 hour. When a 4 hour hooks, who goes all the way? A 1 hour. When a 1 hour hook, who goes 30 minutes? You get the point. When I get a 15 hook, the 5 minutes going to do it. When I get a 5 minute to hook, the 1 minute's going to do it. So again, it's the same on every time frame, and it's the same on every asset class. So once you learn this pattern in this process, it works on all markets and all time frames. So why are we looking at this bouncing higher? I'm looking at a retracement right now to a potential lower high and a lower low. Well, we don't know if we're definitely going to get a lower high and a lower low, but why are we leaning that way? Well, just look at why the weekly is exhibiting this behavior. It's going from overbought to oversold. Someone tell me why the weekly would go from overbought to oversold?
Eric says they're heading for the sweet spot.
Right? And what does this mean when we're hooked over and headed lower? And I see the weekly cycling and it makes the cycle all the way down. If you were listening, and I'm going to move my red line. So now that we have a hook to the downside, it's hooked down, green, red, everybody's down, and then the trend momentum's across and they're going down. How did we know we were likely to see the weekly make that cycle? Did we have any idea that this would be the case? The answer is a sounding yes. All you got to do is go to the monthly, and you can see the monthly has the hook and the cross pattern. See it? Monthly hooked, monthly crossed, hook, cross. So what does that equal? A monthly hook to the downside with a cross to the downside, hook and cross down on a monthly means the weekly is going to move from overbought all the way to oversold. If it tries to slingshot higher and make new highs, it's going to fail and it's going to fizzle and then what? Cycle to oversold. This is expected behavior. And for those of you that may have been in my class during that period, some of our students are actually attending this webinar. We invite them to our webinars. We invite them to class. We love our students. We always want to educate. So we knew we were going to get weeks and weeks and weeks and weeks and weeks of downside pressure on gold. Why? Because the monthly did that little hook and cross pattern months ago, right? Hook, cross, and we were going down for month after month after month after month after month. So back to the question at hand. You said market review and where we're going. Gold is likely to make a lower high and a lower low still, and the weekly is likely to go up and depressurize and slingshot back down. Remember, when a weekly is following the lead of the monthly and the monthly hooks and crosses, it tells me the weekly is going to finish this down cycle. Well, it's possible the weekly could finish the down cycle, of course, but it's likely we're even going to see it slingshot lower like we already have. It tried to go up and slingshot a little lower right there, very small one, but the bias is it's going to do it again in the future. So why are we talking about a bounce on gold? Because when we start to get the daily hook and cross pattern up, it means with 4 hours going to make that cycle, right? When we get the excuse me, I'll turn this back on so we can get to the edge of the chart. You can see, well, Gary, the daily was trying to go up, but it's turning back over, right? That's expected behavior. The daily slingshotting lower and lower and lower and lower and lower and lower. Why is this behavior expected? Because the weekly is still down, it hadn't turned up yet, and the monthly is still down. So this is exact behavior you would expect. Well, why do you think this bottoming process is beginning? Because notice the daily, it's getting exhausted. It's been in oversold territory for extended periods. Well, the goal is to line them up, and the goal of the indicators is to go from one extreme to the other. It goes from oversold to overbought, overbought back to oversold, oversold, overbought, back to oversold. And the only time it hangs out in either oversold or overbought conditions extensively for extended periods is with the slingshot phenomenon. In other words, if this daily one keeps slingshotting lower and lower and lower and lower, then this would not ride out in oversold territory. Well, this is the behavior you would expect a daily to exhibit when a weekly is cycling from overbought to oversold. Because a daily cycling down is not enough to pull the weekly all the way down. The daily has to cycle down and then slingshot lower and lower and lower and lower. That's what pulls this weekly down. And I could show you that in every example. So the bias is once we get the weekly to hook, not until then. So patience is a virtue here. Once it hooks, it's for the price to start bouncing, and we have a high affinity for a sweet spot location. So I use that as an analogy. We're saying we know when we get a hook and cross pattern, even on like a daily here, we get a little daily hook and then it finally crosses. That means the 4 hour is going to cycle up, finish the cycle, then turn over. Well, the bias is the daily would do this behavior because why? The weekly's still down and the monthly is down. So you can't expect gold to start bouncing and soaring to new highs unless we get these time frames to reverse. And the monthly's not ready. The weekly's getting more and more ready to start turning up. The question's going to be at that point, does the weekly turn up and go all the way to overbought? Or does the weekly turn up just to slingshot back down? That's where the Fibos come in. So once I get a hook and a cross pattern on the weekly, the likelihood we at least make a 38.2% retracement becomes extremely high probability. Not a guarantee, but extremely high probability. So what do? Do I need to wait for the weekly to finally turn and hook here? No. You can wait for the daily to start the process, but the daily is currently down, and that means we're going to see gold go lower, hint, 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 for a little bit longer tonight while we're in this session, and look for gold to keep stair-stepping up, down, sideways to lower. Why? Because the daily's engaging over and the 4 hours down, so it's likely to finish this cycle down. So expect gold to do what? Bounce up and down, almost like on a pogo stick, up, down, sideways to lower. But be careful to the downside. We're expecting a bounce coming relatively soon. So intraday today, Mike, if you had the software, and intraday today, when we go into tomorrow's session and this 4 hour goes 4, 8, 12, and we go into Monday's session, we're likely to see the 4 hour turn and hook, and intraday you can scalp that with ease. Why? Because once the 4 hour hooks and crosses, just like anywhere else, all time frames, it doesn't matter how you slice it and dice it. That's why we call a slice of heaven. We slice it in pieces, and it comes up heavenly every time. So what happened to the 4 hour when it turned and hooked? Well, we ended up with a hook and a cross. So what does that tell us the 4 hour hook and cross equals? That means the 1 hour is going to cycle to overbought territory. So what did our 1 hour do? It cycled to overbought territory. Say it on cue. It cycled to overbought territory, so we had hours of upside movement. And that's what you can expect tomorrow once this 4 hour and these lower time frames finish their cycle. So again, gold is just not going to keep dropping straight down. It's going to bounce up, down, sideways to lower while these time frames finish. Well, Rich, what is all this? It is a gauge. Just like when I jump in the car and I say, well, do I have gas? I check the fuel gauge. I don't just go sniffing the tank or shake the car and go, it's like a half a tank, it seems like. You look at the gauge. That's what the software is. You can trust the gauges and they work beautifully by simply aligning the time frame. Well, what if I told you I did all this programming of all this aligning and it built it into a trade management system? Well, trade management system that easily takes on long trades, long-term trades. Here's one that we're in. We're up over just under 1,300 pips, 1,291. And yes, we're starting to bounce again. And we're seeing this daily give us a daily hook and a cross. Well, notice that we started to bounce off the low, and we've gone up the last 3 days. Why? The daily gave us a hook and a cross pattern up. So what are we learning? That it means the 4 hour is going to cycle to overbought. And check it out. It's cycling to overbought. It's cycling to overbought, and it's not quite there yet. So the pound odd currency pair is expected to keep stair-stepping higher, at least for the 4 hour to finish the cycle. And what if the daily keeps going? Once the 4 hour finishes the cycle, if the daily keeps going day after day after day after day and keeps moving, the PAI right there keeps moving up, and this trend momentum keeps moving up, the only way that can happen is for the 4 hour to not only finish the cycle, but once it gets up there, turn over and start slingshotting. And I'll move the cursor back so you can see when it was last in a big uptrend. We've been in a downtrend, but you can see the last time black gold and pound odd has bounced is what? The 4 hour goes from oversold to overbought, then it slingshots right there, slingshots higher and higher. Notice every time it pivots higher and slingshots higher and higher and higher and higher and higher. And what do we keep doing? Higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And notice that was a given because the 4 hour hooked and crossed, and we knew the 1 hour would continue the cycle. The daily hooked and crossed, we know the 4 hour is going to finish the cycle. So there you have it. Very simple. So again, the pound odd is expected to stair step higher because the daily has a hook and a cross, and that 4 hour will finish the cycle. So as a scalper, what can I do? As a scalper, knowing that this will continue higher, as soon as my 1 hour turns over and slingshots back up, I can buy that dip. And when it turns over and slingshots back up, we can buy the dip and look for this to stair step higher in the coming hours. Well, everyone likes gold. Everyone likes currencies, right? We trade Forex too. Well, how about treasuries? Anybody trading a 30-year treasury bond? Well, notice this. We're definitely going to go higher because we have right here on a weekly. We engaged down and then failed. What does that mean? It's turning and hooking out. There's a little golden rule. Whenever you get a slingshot that engages and disengages, you're going to expect that price when it does turn. What would you mean by disengage? When it was going down and it disengaged by turning back up like that? That means price is going to rally back toward the previous high and make a new high. How about that? Well, are you sure about that? Yes. Very high probability we're going to continue to stair step another couple of points and look for 30-year treasury, not just to go straight up like a heat-seeking missile and a rocket straight up, but it should stair step its way back toward the previous high, which is sitting up here at 145.7. So we got just under a point now to get back toward the previous high. Well, the bias is it's not only going to go back to the high, but it's going to make a higher high and likely start moving toward the Ichimoku cloud here. That's what this weekly retracement's all about. I drew that months ago talking about when Treasury bonds would give us a weekly retracement, and then eventually we're going to get a monthly retracement. Why? Because the weekly and the monthly are both in oversold territory. That's why we're expecting this bounce. Well, long term, the projected path is lower high, lower low, and we have a target down here at 126/127 previous swing point low. This is where we're definitely headed. Lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Stair step down here probably over the next year or two. And anyone understand bond prices? When the Fed raises interest rates, the price on this chart goes down. When the Fed goes negative interest rate or declines or reduces their interest rate, that's why we had bond prices going so high. Now they're reversing, and guess what? The Fed is projected to raise rates for the next several years, so that's going to put a damper on these rallies and start to accelerate the sells, and we're going to stair-step our way down. Well, anyone use Gartley patterns? ABCD pattern? We have an A, a B, a C retracement, and we're working on the D extension. And that also lines up confluence of events with the previous low and my 161 extension. So this is all leading up to lower highs and lower lows, but we first need the monthly to continue to depressurize so it can what? Slingshot lower and lower and lower. Well, ladies and gentlemen, this software is so easily anticipated that we called this long before. When this was moving lower, I said look for this retracement to go back up, and as it does go back up, it's going to turn and head back down and slingshot to a new low. So we called this in advance, this move here and this move down. And what did it do? It went right to the Fibonacci sweet spot to slingshot lower as expected, and then we went on to make a new low. Well, why are we in a new uptrend? Again, the monthly's back and oversold, needs to depressurize. The weekly is in oversold territory and it's needing to depressurize. And recently, by engaging and disengaging, that's a sign this is going to continue higher. So those of you that trade bond, watch bond prices go up another point or two, probably 3 to 4 in the next probably week or so. And likely to start, if you have an Ichimoku chart, look for a weekly time frame on a 30-year Treasury bond to start navigating up and be almost like a magnet pulling it towards this cloud area. Well, where's the retracement? I know we're going to go back to the previous high and make a slight newer high. It depends how quickly we get there. We can go higher up, or if we go slower, we can come over to the side. But the bias is still to start moving toward this pink cloud. As my weekly continues to push higher for several more weeks, and my daily does what? The daily finishes the cycle. Then when it finishes the cycle, it's expected to slingshot higher and higher, right? Slingshot, slingshot. So the weekly can finish that cycle up. The daily's likely to turn over and slingshot in the coming days. So as a trader, we know this is going to grind a little bit higher, but once the daily starts to turn over, it is going to pull back, but it's expected to keep going with higher low, higher high, higher low, higher high, short term. So the daily is likely to go back and slingshot higher. So what? The weekly can continue to push. Now, do we have a monthly that's in agreement yet? Well, we have the beginning of a hook, more flat than truly up, but it's starting to hook here. But notice we don't have that crossover yet. So once we finally get the monthly to show this hook and a cross, then it tells me this weekly will absolutely finish the cycle. So I know we're going to get more upside for at least a few more days and likely to see it for a few more weeks. All I have to do is keep watching this weekly. And if the weekly doesn't turn over and keeps going higher, higher, and higher, then the daily is absolutely, positively, without question, going to finish this cycle. When it does, it's going to turn over and you buy the slingshot, buy the slingshot, buy the slingshot. So watch for Treasury to go higher short term, then sell that rally going back down. When what? When my daily finishes its up cycle, my weekly's up, I want to see the daily finish the up cycle. So we're probably talking about a few more days until I start to see the daily overbought turning. Then I'll look to take aggressive profits and even scalp this back down in expectation the daily is going to turn over to slingshot higher later. I could still scalp it short term. So it depends what you're trying to accomplish. This long term is clearly going to make a lower high and a lower low. And from the monthly perspective, we can clearly see why. Highs, lows, lower highs, lower lows. And a definition of a downtrend is what? Highs, lows, lower lows. So by getting another lower high and another lower low and another lower high and a lower low in the months and year plus to come, as the Fed raises rates, we're headed down to this destination and look for it to go back towards that 127/126.31 confluence of events. So again, it's probably several months out before we get down here, and we're probably looking at least a few more days, if not a week or so, still up. Then it's going to turn, and this will slingshot back over, and my weekly will finish its cycle up and allow the monthly to depressure. We call depressurization when we're oversold and it starts to move the opposite direction, or depressurization when we're overbought and we start to separate. That's what we call depressurization. So this is likely to finish that up cycle, so we're probably looking at several days to maybe a week or so more upside, but clearly not looking for a breakout up. We're looking for simply a little rally to a lower high and a lower low. And what do you mean by lower high? Not this lower high here. We're talking over here. We're no way going to go up here and through the cloud and go all the way up this direction and break these previous highs. Only way that can happen is the monthly that down reverses and goes all the way to overbought. You'll see signs and symptoms of the cycling time frames way before you have to worry about that. All right, so look for this to grind higher the next few days to few weeks. And I don't mean every day a green candle or every week a green candle. No, it's going to give us pullbacks because the time frames are always going to cycle. All right, also, when you're looking at trades that are setting up, here's one we're up 324 pips. We placed this trade in our live classes in advance because the time frames were all lining up. And we knew it was expected to grind higher and then slingshot higher and slingshot higher. Anyone want to guess why? Well, just look at a weekly. A weekly has been moving from oversold towards overbought. And this was projected, expected, anticipated in advance. So when we got a big pullback, we entered off the pullback because we knew it was expected to turn and hook out. When it did, we entered the trade after the initial move. We entered and scaled into that trade, and we're still up another 316 pips from the scale in. Well, guess what? When this turns over yet again, which it eventually will, the bias is it's going to turn over to slingshot higher. Why? Well, it's simple. When the monthly is up, you expect the weekly to do that. And why do we know the weekly is going to finish that up cycle? Because we have that hook and cross pattern on a monthly. Everybody see it? The hook and the cross pattern up on the monthly. That means the weekly will finish the cycle. And we knew that for weeks. And here it is, doing exactly like we said months ago. Just because the time frames align by showing the hook pattern and then the hook and the cross. So this is the same thing. I can slice and dice this until the cows come home. It's the same every time. Why? That's what the software does. So what happened when I got a hook and a cross on this weekly? What did the daily do? Well, the daily started to move from overbought to oversold. If it tried to slingshot lower, it failed. And once it got to overbought, it slingshotted higher and higher. I can tell you that's what it did already just by looking at this. Watch what the daily's done. The daily did exactly what we expected it to do. It would move from oversold towards overbought. Why? The weekly hooked and crossed. So the daily would make the cycle. And if it tried to slingshot lower, it would fail and then go on. What happens when you get a failed slingshot that disengages, goes back to the previous high, makes a new high? And then when it turned over, is expected to do what? Slingshot higher, higher, higher and higher. Why? And then my daily decides to cycle all the way back because the weekly engaged down, then disengaged. And the daily did what again when the weekly turned back out? Went back to overbought and slingshotted higher and higher again on cue. So this is behavior I tell you in advance. We call it painting the MPA PE3 Picasso. Because in class I tell you exactly what to expect, when it turns, why it turns, what to expect, and what if it doesn't go in the direction we believe. Then we'll tell you, based on the time frame, why it won't turn and what to look for on the other time frame. So I tell you exactly what to do, when to do, how to do it, why to do it, and you see the results. That's because the time frames will always cycle. Knowing they're going to continue to cycle, the ebb and flow of the market, then that means this software can never become obsolete. Ever. And whether you're trading Bitcoin, you're talking cryptos, S&P, doesn't matter what you're trading. It's the same thing over and over and over. Now, S&P, everybody loves the S&P. Look for the S&P tonight to continue to do this stair-stepping lower to finish this cycle. Everybody see the 4 hour? Why do we know the 4 hours is going to finish the cycle? Anybody listening? When I said, what's a sign and symptom that we receive to know when a time frame is going to finish the cycle? You can bet you we have a daily with a hook and cross pattern. It's like clockwork. It is undeniably consistent. So because we have a hook and a cross pattern, you see the hook and this red line, the trend momentum crossing down below, that's what we call a cross. What's the definition of that? Well, on this red and green, it's when the green line goes below the red. That's a cross down. And when it's up, it's the green above the red. Well, in this other trend momentum number 2, it's when aqua's below the yellow, we're down, and when aqua's above the yellow, it's up. Well, what do we right now? We got a trend momentum 1, green below the red, down, and we have aqua below the green, the yellow, down, and we have a hook and a cross. So this right here on the daily is why I knew the S&P was going to give us downside pressure. Well, not just because I said so. You can listen to my archives and classes where I told you live when it was happening as this was going up, look to sell. As we were in here buying this dip, I said, look to close this out, maximize your profit, and look over the next few days, it's going to start to retrace back down. Why? 4 hour, 1 hour, 30, daily, everybody was in overbought territory needing to depressurize. So that means this 4 hours is going to finish the cycle. Everybody good? So when do we buy this dip? When the 4 hour turns and hooks back up. Whether it takes 4 hours, 8 hours, 12 hours, when it finally turns and hooks, it'll buy it for you. How about that? Or I can buy it myself when it turns and hooks. You can do it manually by entering the data now, or you can set it up to where it's automatically going to buy it when it's finished. So how's that helpful? Notice it's very helpful across the board. And let me pull up this platform. And here's a couple of trades for Forexers. There's the pound Swiss and the pound yen. Pound Swiss and pound yen. Both are extremely oversold because we've been in this intense downtrend. Well, in each case, all I got to do with the software is what? I see a trigger. Green, that means go, and I see a hook pattern, done. I get a hook, I get a trigger, I go. And as it hooks and crosses, then we know we need to stay in it until what? Notice the software, it's so smart. It started firing what we call profit triggers because we started to get back in overbought territory, telling you we need to start peeling some profits off because we're looking for a reversal coming. And when it finally triggers you to go short, you can close that long trade and go short. And then buy the trigger, sell the trigger, buy the trigger, sell the trigger. Well, notice, this has been going down, and it's not just because it's oversold it triggers higher, is it? Where's the trigger? There's no trigger yet. How smart is that software? How smart is that software? So you see how it says ready to trade right there? That's my automated system in ready to trade mode. What does that mean? That means once this finally finishes and does its thing and we start to hook and we get a trigger, it's going to enter this trade automatically. And I don't need to do a thing. Mike, whether it takes 10 minutes, an hour, a day, a week. Like if I'd have set this way back when I saw this slingshotting lower days ago, and I said, okay, I'm going to set this to trade long once we finish the cycle, it would just sit here in ready to trade mode until it's ready. Well, this is going to be two great trades. Why? Well, think about it. A, we're looking at a Fibonacci retracement of a substantial move to start. Right? We're looking at least a Fibonacci retracement up in this area. And those of you that are familiar with MetaTrader, you can turn, right click on this, go to customize. I use this little highlighted box called the rectangle. You highlight it, you insert it, and then I can move it up or down. I like it next to my Fibonacci retracement. So you see, I can move it to where it's right next to my Fibo retracement. Everybody see it? And then I say OK. And now I can use this little box to designate where the bounce is likely to go to once it starts. Hint, hint, hint. once it starts. We don't have the hook, so we don't have the bounce. We don't have the hook, we don't have the cross. Once we get the hook and the cross, what? High affinity, we're going up toward this 38.2, which is about 350 to 400 pips away, just to get to the minimum 38.2. So why do we expect we're going to get a nice retracement off the daily? Because it's oversold, right? Everybody see it's oversold. And watch when I change time frames, it's going to make this go from ready to trade to click and drag to trade. See it? It took it off of the set because I changed time frame. Why does it do that? Because it knows what time frame you're on. And a trigger on a weekly is different than a trigger on a daily. So notice the weekly hasn't triggered yet. It's still down. See it? So it knows the daily's not ready to trigger up until we're getting more in tune with the weekly getting the bottom and start a bottoming process. Then we're going to get that trigger higher. So notice how easy it is to set this trade management system. All I got to do is go to a daily. I know the weekly's deeply oversold. It's still down, right? It's down, but it's oversold. See it? Down, 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 down. And oversold territory. See how we color code everything? You think when you're above the red line in overbought territory, you think of selling, so the line is red. And when you're oversold, you're thinking about buying, and it's a green line for buy. And why aren't we buying right now? Because it's not ready yet. It's still grinding lower. It's finishing the cycle. But this will turn and hook, and that's why I believe we're at least going to see the daily cycle up to a sweet spot, if not the weekly turn and hook and the daily cycle all the way to overbought. So first things first, how do I set the parameter to get it ready to trade? All I got to do is click this, slide and drag it, and then when it ticks, it's ready to trade, I'm done. That's simple. Now I'll let it sit there, and when it's ready, it'll pop, enter the trade for me. It puts a stop loss by take profit 1, 2, and 3 on here. And then when it reaches profit 1, it moves the stop loss into profit. Does everything for you instantly. So this could stay in this mode for hours, maybe even days, until it's ready to go. Well, someone says, well, I don't want to wait for days. Set it on that chart and go somewhere else, right? Set it on this chart knowing it's in the same boat, daily deeply oversold and a weekly deeply oversold. It's due for a bounce. It might slingshot lower later, but you're still going to get days of upside pressure. And notice when I change, it's going to go ready to trade, and it's going to go back to click and drag to trade because I changed time frame. That's by design, but check out the weekly. It too is deeply oversold. So we're due for at least a little bit of a bounce off the weekly. So check that out. Same scenario. Once we get a hook and a cross pattern on the weekly, we know we have a high affinity for the pound Swiss to retrace to 6150/38.2, aka sweet spot. Okay, what about the daily? Well, the daily is a little bit different because we have a swing point up here for the weekly to the low, but check out the daily. The last time the daily was overbought was right there. So we run another Fibbo to give you multiple targets. So my immediate target would be the 38.2 on the lower degree scale. That's the daily retracement. And I'm going to draw that box for you so you'll see the two different boxes side by side. So notice, we'll have targets up here at 38 to 50 to 61 on the daily retracement scale. Why the daily? From the daily swing point high, notice my cursor, from the daily swing high, where was I overbought when that occurred? Here and here, so that's the swing point high for the daily. Where was I in overbought territory for the weekly? I only slingshotted lower here on the weekly. I wasn't in overbought territory till here, and that represents that swing point high. So notice these two blue boxes. That's my target 1 box, target 2 box. Well, when do I start to take this retracement seriously? When I start to see the hook on a weekly, then I'm going to expect we're definitely going to reach the first target box. Why? Because when a weekly hooks and crosses, that daily is going to go all the way to overbought. Simple as that. So when the daily goes all the way to overbought, what should happen? It should make the retracement into the daily retracement area. Everybody good so far? Pretty simple. It's just aligning the time frames, and that's where a high probability we're going to see what? We're going to get the daily once it hooks and crosses. we should see the daily start ramping up here. If the weekly hooks and crosses, then we're definitely going to reach this target and likely to start focusing on this target. All I simply need is to be patient and allow the system to set it up and place the trade on its own. So notice, again, all I have to do to set this is simply go over here, click and drag the trade. I set my parameters. Look how cool this is. You go into the Expert Advisor and you tell it what you want to do. Do I want to buy the dip? Do I want to sell the rallies? Do I want to buy the dips in an uptrend? What do I want to do? It's all completely customizable. So in this example, and I go to Properties tab, I can tell it, you know, how many lots I want to trade, what I want it to do, and you notice here, use trade trigger long, true. I want to buy the dip. I want it as soon as this thing triggers, I want to go long. What about a slingshot short? Another one's short. Well, we're already deeply oversold. I'm not interested in selling this right now. I want to buy the dip first for the retracement, then I'll think about selling it. So notice, I can tell it there, only use the trigger long or slingshot long, ignore the trigger short or the slingshot short, aka buy the dip in an uptrend. Okay? And that's how simple it is. All I got to do is click once till I see a little dot, slide it over, click and drag, and then once we get tick date, it'll say ready to trade. And I'm on the daily time frame, so that's all I got to do. I'm done. Move on. And just let it play out. That's how we do it. Very simple. Whether it's the dollar yen, any S&P, notice the S&P. We got a trigger, and this is what I said the other day in live class. The daily was we were rallying, buying this. We said, look to take those profits, right? Eric, take the profits and look for this to go down. I'm not looking for the S&P to crumble to nothing. Of course not. Not right now. I'm looking for a higher low, higher high, higher low, higher high. And if you really want to know my outlook for the S&P, I'll switch you over to this platform where I have my little platform with my... One second while I pull that up. Have my wave counts and all my other technical analysis. So let's go with this one. The bias is we're in the process of stair-stepping higher. Keep buying the dips in the uptrend and we're definitely going to reach 3,000 and above. I've been saying that for years. And it's still working on its process. So Gary, is this going to go straight up to 3,000? Of course not. We're in the process of a little bit of a pullback. See it? We're pulling back. Why are we pulling back? We're pulling back because this is moving lower. Okay, so what did I say earlier? We're looking to buy this tomorrow, not now. We're looking for this to go lower. Why? Just check out the software. It's pretty simple. We have a daily with a hook and a cross pattern down. What is that telling me? Somebody type in the answer that you've been listening. We have a hook, we have a cross. Hook, cross, down. Daily. Daily hook and a cross down means the 4 hour is going to finish that cycle. See it? See it? So what does it mean? It means that we're going a little bit lower, but then we want to buy this bounce back up. When do we want to buy it? When the 4 hour finishes, turns, and then hooks. That's simple. Turns and hooks. Well, we did a webinar, I think it was a couple of weeks ago, on a Sunday night, and we were watching this as we spoke with the S&P. And we were in the process of this little bit of a pullback, and we were talking about it coming back over here, and the 4 hour was starting to turn in that webinar, and I said expect this to turn back down, and as it does, look for price to go lower first, and as it comes back to the cloud, to the previous low, look to buy it off the cloud, and this has happened when we were in the event here, and it went down as if I had read the future. And this baby turned over, went down. As soon as it turned and hook, I told people to buy it. And this resulted in a 38.5 point move. Any futures traders out there? Any E-mini traders? We don't trade E-minis to get a point or two. We trade E-minis to get 10, 20, 30, 40, 100, 200, 500, 1,000 points. We don't mess around with a point or two. We take it all. You heard my wife. We'll take it. It's just the time frames align. So how do I know I'm going to let it run for 30 points versus 300 points or 2 points versus 10 points? It's based on what time frame we're in alignment with and how long the cycle takes, right? So an example, when the 4 hour started to turn and hook because the daily was depressurized, we expected the daily would slingshot higher. Why? The weekly's still up, so the daily was expected to slingshot higher. It did that. So we knew the 4 hour was expected not only to bounce, but bounce and start making new highs. Why? Because the daily started to turn and it engaged up. That forced it to go on and make a new high. So I'm not going to just bog down on this one. I'm going to show you some more. But this is clearly a hook and a cross pattern, which means we're definitely going to go a little bit lower and an up, down, pogo stick sideways to lower move. But the bias is tomorrow or later this evening when this turns in hooks, you want to buy it. And expect, even if it goes up to slingshot lower, you still can buy it and make several points on the bounce. So why are we looking for this down move to start to fizzle and then look for a bounce? Check out where the time frames are starting to line up. They're still down, so we still got a little bit more to go here, but check out its counterparts. The 1 hour is oversold, right? What is it doing? Slingshotting lower and lower. Notice a 4 hour can't make the cycle without the 1 hour cycling and slingshotting lower, lower, lower. This behavior is anticipated easily. And you won't hear me say like every other firm says, we predict, our prediction is this, prediction, prediction, prediction. We don't predict with MPA. We anticipate. I leave the predictions to the prophets. And I anticipate with unbelievable accuracy because of this signs and symptoms in using these gauges. So this behavior, while I'm in what? I could be in a trading room and go, okay, I know my 4 hours is going to finish the cycle, so every time my 1 hour goes up and slingshots lower, I can sell it, maximize profit. Then when it does it again, sell it. And when it does it again, sell it. When it does it again, sell it. So I could be in and out of this trade multiple times. This behavior is anticipated in advance. Why? Because the daily hooked and crossed, and it meant my 4 hour was going to move from overbought to oversold. In order for it to make that cycle, the 1 hour must do the same and slingshot lower and lower and lower. That's the only way the 4 hour can cycle. How cool is that? So yes, watch as this goes a little bit lower, take some profit, and then when the 4 hour turns and hooks, look to scalp that back to the upside. And it's that easy. All right. Now, remember, all of this is built into a trade management system. Well, everything about the hook and cross trigger pattern, all the slingshot triggers, everything's built into the trade management system. Everything's built into our, let me go to this platform, we call a Slice of Heaven Finder. It's one of the scanners. And notice, I can set it up where the pivot point I'm interested in is a 4 hour. Then here, look at how many of these currency pairs are setting up for a 4 hour bounce. Some are setting up, gold is setting up for a 4 hour further down. It's triggering short, see it? So for the gold euro pair, that's going lower. For gold odd pair, it's going lower. So there you have it. So what if I want to trade those big trades, Gary? Then you simply go into our Expert Advisor, Properties, and I can customize this to say, well, I don't want to run it off the 4 hour. I want the big boys when they're aligned. All I got to do is use the little drop down right there, and I could say, well, I want the monthly, weekly, and daily aligned. I want the weekly. I want the daily, the 4 hours, so I can select any one of these time frames. So if I go with the weekly, for example, and I say, okay, it's going to reestablish, and it's going to pull up, and it'll say the weekly, the daily, the 4 hour. And this is telling me where the trend momentum and the PAIs are located, whether we're triggering lower, triggering higher, slingshotting, where in relation to the cycles are we? And that's what this does. And it'll scan through every symbol that's in the market wide. So it's the euro dollar, and then it'll go to the pound dollar, dollar Swiss, whatever's in the list. And these platforms these days have hundreds of symbols, whether it's stocks, futures, commodities, ETFs, bonds. It doesn't have every single, all 8,000 U.S. stocks. No, it doesn't have all that. You don't need to trade all that. It's got more than enough symbols and hundreds of things in here to trade, and it'll scan through everything that's in here. Well, what if I'm not interested in trading Forex, but I want to use this scanner for stocks? Then you can customize this, what we call the market wide, and only have stocks in it. or ETFs or bonds or Forex or whatever you're interested in. So you can customize it however you like. And then it'll scan only the symbols you want.
And then you customize your time frame.
And then you customize your time frame. Now, we offer a second scanner. That's called the Slice of Heaven Finder, and we'll explain the difference in the two. The other scanner is where I type in, based on the, again, market-wide, I can add any symbol I want. Gold, silver, S&P, Tesla, NASDAQ, currencies, and it can track whatever symbols I'm interested in. And notice, at a glance, it tells you every time frame from 1 minute to the monthly. It tells you what direction the trend momentums, if they're up or down. Are they straight down, starting to bottom and reverse? Are they forming slingshots? Are they engaging in slingshots? See it? Are they triggering higher, lower? Everything's at my beck and call. It'll tell me what trades I'm in, what my average daily range is, how many pips for that day has moved. So are we near our average daily range already, et cetera, et cetera. All this is 100% customizable as well, so I can add whatever symbols I'm interested in here, and then I can follow the ones I'm most interested in. So why are these two scanners there? Because it allows us to get the next big trade without missing out. So anybody interested in making a few points on the S&P, it's going lower. Why? Because my daily hooked and crossed, which means the 4 hour is going to finish the cycle, right? And when my 4 hour finishes the cycle, what's it going to do? It's going to start to bounce, but we're going to allow the time frame to finish their cycle, and we're almost finished, so we should get a little bit more to the downside, then look for the bounce to come later, and that is intraday. I like to use the 4 hour. Why the 4 hour? Because when I get a 4 hour hook, I call that the foreman. He's the gatekeeper between the lower time frames and the higher time frames. And the gatekeeper is the bellwether. So once I get a 4 hour to hook up, then I know we're going to get the 15 to 30, the 1 hour to move from oversold towards overbought. Notice triggers. You can say, well, Gary, wow, that's a big, huge red trigger, and there's a smaller one to the side of that. Right. The triggers tell me right when this fired that my 4 hours in alignment. Because it's a large trigger, it means my lower time frames are in alignment. And because it's the big trigger here, it meant my upper time frame was in agreement. So all three, when I saw this on a 4 hour, means my lower time frame, 15:30, 1 hour, in agreement. My 4 hour was in agreement, and my daily was in agreement. That's why you get this larger degree trigger. It's all included in the software. It's all in there. And what do you do for a visual? You see a trigger, you see a hook, you go. It's that simple. Why we go further with the hook and the cross? Because what it means, a 4 hour hook and a cross pattern down means that 1 hour is going to go from overbought to oversold. When the daily hooked and crossed down, which we see, right? It hooked, it crossed. It means the 4 hours is going to finish the cycle. And I told everyone last week, as we come into this week, start selling, going latter last week into this week, and look for a dip to buy. I'm not expecting this to break down into dust and go to zero. Of course not. I'm looking for it to bounce higher. Well, notice we have different templates. Well, we don't give you tons of templates for confusion. It's because it's all the different tools in here, and every tool is based on the hook and cross pattern. And the hook and cross pattern means two things. You get a twofer. When I get a hook and a cross, it means the lower time frame. So when a daily hooks and crosses up, the 4 hour is going to cycle. When a weekly hooks and crosses up, the daily is going to cycle. When a monthly hooks and crosses up, the weekly is going to cycle. And what's the twofer? That's one. The other twofer is when you get a hook and a cross pattern, you use your Fibbo, and you get a high probability of a Fibbo sweet spot retracement. And Scotty, Rod, everybody, I could show you that well in advance, days in, weeks out, months in advance. So it depends what your personality is. If you're a scalper, then we have so many scalping systems that'll blow your mind. But you're going to be focusing on the lower time frame. You still use the hook and cross pattern. You still do the same. Well, why would I not use a hook and a cross on a daily knowing I was going to get days of upside pressure? So as a scalper, if I tell you, well, you can scalp and make a few points on this, but if you stay in and allow the daily to do its rotation, you're talking making 20, 30, 40, 50, 100 points. Would you be interested? Yeah, that's all we need is a hook and a cross, and that what's it mean, right? So that's your twofer. So again, this is likely to go down a little bit more, but we're not looking for just a plummet straight down. The daily is down. The weekly is currently feeling the pressure. It's overbought, so it might start to turn, but until it does, what happens? Oh, what do we know? If we see the weekly hook and cross, we're not quite there yet. We're flat, and look at green money flow. This is unique indicator. They're built, and it has tons of things in them. Our trend momentum has volume,
Data points.
has tons of thousands of calculation data points. It has also the PAI has not only the ebb and flow of the market, but we call this money flow. How much money is flowing into the market on this time frame? How much money is flowing in the market on all time frame? That's why we know whether it's up or down. And when it's up, you align them, you go, you use a trigger to go long. Well, notice there wasn't a trigger down here to go long. Sometimes you don't get a trigger unless you're maxed out. That was by design. So what do? We buy the slingshot if you're interested in buying that move. But again, the monthly is overbought, and I know I just opened this new platform, so I don't have a whole lot of data, but the monthly's way overbought, and I could show you it on this other platform just so you know I'm speaking from experience on this. Here is the monthly S&P, and look at the monthly here. It's in overbought territory, see it? It's been slingshotting higher. So when people look at software, they go, you know, these kind of oscillators, they never work in trending markets. Well, when you marry the trend momentum and the PAI together, it's the best thing since sliced bread. Because look at it, all you got to do is keep buying slingshots, buying slingshots, buying slingshots, buying slingshots over and over and over and over. And we've been doing that for years. Why? Because the prognosis is the continuation higher. We're going to 3,000. We're going to continue to engage, then come down and engage again, and come down and engage again a few more times. Why is that? Well, look at what a slingshot is. It's when this separates, but why does it turn and hook? Remember, it's the time frame. So in every case, I see like right here, okay, the weekly with monthly was moving down, and then it turned and hooked back up. Why did it go down and reverse and go higher? Why did this go down and reverse and go higher? Because what's happening here? The weekly's moving from oversold towards overbought as we're depressurizing. The monthly's depressurizing, so the weekly's moving from overbought toward oversold. And then it reverses and goes back from oversold back towards overbought. Everybody see it? So look at the weekly. What does it do? Like it's supposed to. It goes from overbought to oversold, and then once it reverses, it goes back to overbought. That's simple. So that's what I mean by buy the dip in an uptrend. All I have to do when I want to buy a weekly slingshot, or in case that monthly slingshot, I buy the weekly when it turns. When I want to buy a weekly slingshot, I buy the daily when it turns. Notice how we can keep slicing this up. See this daily engaging here? What happened? It's the 4-hour going from overbought to oversold, depressurizing, that allows the daily to do this behavior. Then it's the 4-hour reversing going back to overbought that forces the daily to engage. And again, this behavior was anticipated in advance because the weekly was up, the monthly was up, so we are expecting it to slingshot higher, right? So look at what the daily followed. The 4-hour went from oversold towards overbought, finished the cycle down, then it reversed and went back up as expected, so that it would go on and break a new high. How simple is that? Right? Simply using the time frame and the cycle. All right. So what else would you like to look at? How about silver? Let's look at silver. Silver is way overdue. Let me pull it up in this other platform. I have several platforms open. That's the beauty of this. I can run it in multiple platforms. Just 1 second. Silver. So with silver, we're expecting a bounce coming soon with silver, but we still need to finish the cycle down. So my daily is telling me we're engaging lower, we're still going lower. My weekly is down because the daily slingshotting lower. The weekly is going down, but it too is getting deeply oversold. And the monthly is down. Everybody see it? So yes, everyone should have silver in their portfolio. Silver is going to go soaring higher in the next several years. Once the markets start imploding, silver is going to be a rush to safety, and gold and silver are going to go much higher. But we're still in this declining market. Why? Look at the hook and the cross pattern on a monthly. The monthly's hooked down, it's crossed down, so that tells me the weekly's going to finish the cycle down. What's it doing? It's going from overbought all the way to oversold. Overbought all the way to oversold. So this is another one that's getting ready for a bounce, yes, but it still needs to finish its down cycle. So silver's still pulling back. I got a monthly down, a weekly down, a daily still down. Yes, oversold, but still down. And we would be taking profits now that the 4 hour is starting to get oversold, but I still expect silver to bounce a little bit more sideways, perhaps a little bit lower. But be careful to the downside on silver because we are getting ready for a bounce. Why? Daily oversold, weekly oversold, even the monthly is starting to get near oversold. So we're going to be due for a bounce sometime soon. But that's why we know silver is going to be a good buy long term. I would start dipping my toe in the silver market now if you don't already have some sort of play, whether it's ETFs, buying SLV, or buying silver direct, or any other way, spot silver. I don't care how you trade it. We know this is going to start bouncing. So keep an eye on that, and when we finally get the daily to hook and cross, we know the 4 hour cycle. When the weekly hooks and crosses, we'll get the daily to cycle. If the monthly can hook and cross back up, then we'll get the weekly cycle up, and we'll be off to the races with silver. All right, I think that's enough explanation for the software. Let's continue. Here's some trading results. This was gold I mentioned before, and we don't trade gold for like a $5 move, $8 move. We'll take it. But this is a $126 move higher. This was gold to the downside. Remember the same strategy. You get a trigger, hook and a cross, you go. And this was down, and it went what? Wow. It was a trade worth $150 move. $30,000 trade based on that one entry. $150 move lower. Here's a screenshot of a TradeStation platform of one of our students, and he placed the Slice of Heaven trades. He ran the Slice of Heaven finder, aligned the higher time frame, and started entering all these trades based on the alignment. And he tallied up 8,600 pips. Well, he didn't finish at 8,600 pips. Here's the letter. In current TradeStation, his account now grew to 18,311 pips because the Slice of Heaven finder setups demonstrated we had more to go. So that's why he left the 8,600 run to 18,000. How about that? All right, here it is in his platform, TradeStation platform. He used the signal from our service and placed the corresponding trades in his TradeStation account. Boom, there you have it. That's simple. Aligning the time frames, and we have scanners that tell you when they're aligned. The hook and cross pattern tells you. Here's more of the same. Pound odd. Right? Well, that's a pound odd to the downside. It started out at 778 pips. We didn't close it because we had a monthly and a weekly align and knew it was going to go lower. So this same trade went from 778 pips to 1,274 pips, same pair. Well, we didn't close it then because we knew the weekly and the monthly were still down. So it continued to run. This time it ran to 2,270 pips. Well, we weren't done still. Still had alignment, still had cycles left to go. The fuel tank told me I still had more downside. So we went on to let it run to 3,627 pips. How about that? Well, here's the pound CAD. 3,073 pips. These aren't small trades. It's just aligning the time frame. Continue. Here's one, the pound yen, 3,215 pips by simply aligning the time frames, letting the trade management system run the trade and finish out the cycles. That's it. Pretty simple. And this is another tool we have. It is called the breakout trade system. And this is where you're allowed to put a swing point high and a low. Like a breakout trade during stock, first 30 minutes of trading or first hour, you put a high and a low. Then if it goes on to break the high with volume, you want to go long. If it breaks the low with volume, you want to go short. Well, this way you can set it and you can tell it what time frame you want it to give you a high and a low automatically. This is automatic. It tells you the high and the low. Then I could tell the system, because we're in a downtrend on the pound New Zealand pair at the time, I told this trade management system, look, I don't want you to buy it if it breaks the high. I'm not interested in scalping up. I just want to sell the rally in a downtrend. So I want you to only sell when it breaks the low. 272 pips. That's not bad for a quick little breakout trade. All right, 272 pips on a breakout trade. That was $3,642 on that one trade. Now, what is this program? We offer both the Premium Edition 3 software and we offer our live trade classes. I average about 7 to 10 hours of live instruction. To the nth degree, the most detailed, in-depth discussion around where price is going to go, what's it going to do. And remember when I was showing you a moment ago the platform, and I was saying we paint the MPA PE3 Picasso, right? Remember I was showing you this? Where I tell you, well, this is going to turn and hook, and then we expect it's going to slingshot higher later. But it's going to turn and hook first, and then when it slingshots later, you want to buy that dip. Why do we expect this to go up higher and slingshot again? Because the weekly is still up at the moment, right? It's not down, it's still up. So that's why we believe the daily is going to want to do that. So we want to join forces with the daily. When the 4-hour finishes and then turns and hooks, you want to buy that. That's what resulted in a 38.5 point move the last time. I would not be surprised to see it do similar, although we're talking about a 4-hour and a daily still down at the moment. So I will definitely buy the 4-hour hook, and then I'll look to take profits. So watch this. When this turns and hooks up, I'm going to enter the trade long. And then as it hooks and crosses, I know that means the 1 hour is going to do what? It's going to go from oversold all the way to overbought. Oversold all the way to overbought. So if I'm scalping this, should I get 2 points and get out? 4 points? 10 points? How many points before I get out? I would allow the 1 hour to cycle all the way to overbought before I got out if we see the 4-hour hook and cross. It's that simple. So again, you see a hook and a cross on a 4-hour, your few gauge to stay in the trade is at least until the 1 hour finishes its cycle up and the trend momentum's go into overbought territory. Not yet, because what did we say? We're going up, down, sideways till a little lower till we finish. Then we're going to bounce and go higher. But if you had the software, you'd know exactly when to buy it. And even if you had a job, you could set the trade management system to buy it when it's ready, and it would automatically do it for you. But all of that's built in into our class instruction. We tell you, look for this to hook, and when it does, what to expect, what is exactly it's going to do, where are my targets. We give you everything you need to know and then some. All right? Okay, let's continue. So, what is the premium software? Well, it's the MPA PE3 Market Scanner. Everybody remember what the Market Scanner is? And then the Slice of Heaven Finder. I'll briefly show those to you again. We have the Slice of Heaven Finder, looks like this. And notice we set this to the weekly time frame, and we got the CAD Swiss getting ready to go down. We got the dollar CAD getting ready to go up. We got HSBC going down. We got ITUB going down. We got MS going down. And this will tell you when my daily's starting to cycle and it's still in a downward direction. Why? Because it's thinking about forming a slingshot back up. It's depressurizing what it's supposed to do when it goes against a weekly like that. So all I got to do is go to a chart and I'm good to go. But that's the Slice of Heaven Finder that Mr. Greg actually showed the 8,600 pips, then 18,000, utilizing this tool right there. And the other one is in this platform, and it's this one right here. This is this MPA PE3 scanner where I type in whatever symbol based on the market watch of hundreds and hundreds of symbols. I type in the ones I'm most interested in, and now I can follow all the time frames, slingshots, triggers, everything I need to know at a overview. Very quick and easy. Okay, what else is next? MPA slingshot trade triggers. We showed you where they trigger. You see a hook, you go long, it triggers red, short, and you see it hook down, you go short. That's simple. The trade management system. We showed you not only running certain trades, I'll pull that back up, where they're physically running the trade and managing it. That was that, where do I have that? I believe it's over here. 1 second while I pull it up, just to show you it's running in live market conditions. Up 1,299.5 pips, 1,300 pips. What did we say? This still got a little more upside to go on cue. How about that? And then we have what you didn't see tonight. I'll show you perhaps another event, but it's called the Platinum Asia Scalping System. It is ideally for Forex during the Asia session, and we can use this outside. The other scalping system is called the MPA Triple P scalping system. This works on all time frames, so you're a scalper, day trader, position trader, investment trader, I don't care your personality. You can use this in all time frames as well as the lower scalping time frames. We have the MPA breakout trade system. I showed you a trade similar, I showed you that one, 272 pips on the pound trade. And then we have a bracket trade. Well, what's the difference in a breakout and a bracket? Well, you know how when price is range bound, it's like, man, if this ever breaks out of the high or breaks out of the low, I definitely want to go short or long based on that. Well, I can bracket the trade and say, hey, if it goes long, enter the trade. It goes short, enter the trade. All at your fingertips. Why should we use your software? There's other software out there because ours works and nobody else does. Not as well as ours. And it automatically calculates support and resistance levels. Automatically. I don't have to, was this going to be support? Is this resistance? It calculates it for you. It'll automatically identify the trend of each time frame. Is it up? Is it down? Is it sideways? Is it engaging? What is it doing? It automatically monitors and tracks time frame cycles. That's the key, right? We need to align them, and then we need to align them in oversold before we buy. We need to align them in overbought before we sell. Very simple. It tracks those for you. It provides consistent entries, exits, and take profit level based on the trade trigger, the slingshots, and the profit triggers we showed you in those screenshots and on the charts. Now, the trade management system is a twofer as well. I can set it in advance like we did on this trade over, whoops, let me go back. I didn't mean to change that 1 second. I wanted to go here. Remember, we set this up for you, and we said, based on that we can set this up in advance on the pound yen and the pound Swiss, that we set it up in advance so that you notice it's still ready to trade, but yet the pound yen's going lower. Tell me if that software isn't brilliant. Rich, why didn't it trigger? Why didn't it trigger? Why didn't it trigger? Why is it still going lower? How can that software be so intelligent? Because the software knows the time frame. It knows where everybody is on the chart. All indicators, everything. It's aware of it all, and it crunches numbers constantly. So yes, this will stay in the ready to trade mode until it's ready to trigger higher. And this is a trade, you sign up now, you can set that in your own trading platform, and boom, you'll have a great trade. Could be another day, could be a few hours. I'm just going to say ready to trade, and I don't change the time frame. I let it go. I have the other one set on the pound Swiss. So this is where, whether you got a job or not, you can set it in advance and let it do its thing. That's simple. All right. So that's what I mean by set in advance. Well, what about if I'm looking at a trade in my chart and I see, man, this is ready. The time frames are aligned and they're starting to hook. Then I can manually go ahead and enter the trade and say click and drag to buy it right now, or click and drag to sell it right now. So you can do it where it enters for you, or you can do it where you enter it. Either way, it fits any trading style. The dual scanners, it scans the market for the next big trade. Huge. Never miss out on the big trade. It works on 800 plus symbols, including stocks, forex, futures, ETFs, commodities, bonds, you name it. An assortment for everyone, something for everyone. And it consistently delivers low risk, high reward, high probability trades. Now here's the great part. For your attendance tonight, we're going to offer a monthly subscription. If you go to our website, we normally don't offer monthly subscriptions. We do occasionally, and this happens to be one of them. And with that, we normally in the past when we offered it was $399 a month. That's for the software plus the classes. Well, remember, you're getting software unlike you've ever seen. And you're getting class instruction like you've ever seen. To that degree and nth degree. And about 7 to 10 hours per week. And we go through exactly that. What's going to do? When's it going to do it? Why is it going to do it? How's it going to do it? What's the best way to trade it? Whether I'm a long-term position, whether I'm a scalper, what's the best way to trade it? We go through all that. Today, we're going to give you a special of $297 per month. And that includes every component of the software.
Like other people where we piecemeal it out.
Right.
This is for each little individual piece.
This isn't a piecemealed software where we'll charge you X for one component, X for another, and X for this, X for that. That $297 a month is for everything. And again, I've only scratched the surface on what we truly offer. But once you learn the hook and the cross and the trigger, all you got to do is you see the trigger, you see a hook, you go. That's simple. And then if you don't like that, then you let the trade management system do it for you. Makes it extremely user-friendly. So how do I sign up?
And our classes are very informative and we have a lot of fun.
And we posted the link. Here's your link. https://www.gpatrading.com/amember/signup/monthly 297. We're posting it in the chat dialog for you. If it's not hyperlinked for you, then just simply copy that and paste it into your browser. And I see sales going through now. People are signing up, so thank you. We have class this coming Tuesday, not tomorrow, but on Tuesday, and you could pick up right with us. But if you sign up tonight, you can set those 2 trades in an account like I showed you. Very simple to do, and watch how they play out over the next few days. All right. So I want to thank you for attending the webinar, and we look forward to you joining us. If you have any questions, go to support@gpatrading.com and we'll answer your questions, and we look forward to hearing from you. Why GPA? Because we have the only software called the Market Price Anticipator software. It earns its keep. It earns its name. It empowers you to read and anticipate price in any financial market, on time, in time, all the time. And that is unlike anything that you've ever seen. We're proud of our service. We've been educating students from around the globe. We have over 123 countries and counting. So if you look at our world map and you don't see your country flag, then all you got to do is sign up, and when you do, your country flag will appear on this world map. How cool is that? So back to the nitty-gritty, and I'm going to go back to that link so you can sign up. Let me scroll back to that link so everyone has access, and I'll bold that one more time. And I'll leave that on the screen for now, but there you have it. It's posted in the chat dialog for you, and then you can easily have access to it.
Did you mention that everything's recorded?
Yes, we record everything. Not only webinars, we record our classes. We record everything there is to. Let me move this out of the way so we can see.
If you can't attend live class, it's always available 24/7.
Correct. If you're unable to attend live class, this is the beauty of this. Let me explain the beauty. When we're in class, you're like, oh, well, Gary, by the time I look at that class, it's a day later, or later that night. It's many hours after you were live in class. So what good would it do me to look at the class? Because I'm setting the trades up based on minutes, hours, days, even weeks. So what you see in there, we discuss, we talk about that. Yes, for a scalp, you're going to do this, but the long term, these trades take days, weeks, months to play out, and it's all based on what? The fuel gauge, based on what time frames I'm using to align the time frame. And these trades of thousands of pips are a current occurrence. It's not a one-off. We do it every day, every week, every month, every year, every decade, because the time frames align and it's a high probability trade. Well, do I have a losing trade occasionally? Sure.
Everybody does.
Everybody has a losing trade. But the likelihood of losing trades is far and few between when you align the time frames. That's why I say it every day. Don't trade without the foreman and the workforce, the 4 hour, the 1 hour, the 30, and the 15. Whether I'm going to scalp, why not align those to scalp? So instead of scalping 2 pips, 5 pips, $2, scalp $10. Scalp longer, long as the time frames are in that alignment. But this is where this will run. All I got to do is leave this platform open. What happens if I close it and reopen it? It'll pick back up, but it needs to be running in order for it to try to enter a trade. If your computer's closed, then it's not going to enter the trade, is it? So you just let it run. That's simple. And this trade will go higher in the months and weeks to come on this odd, pound odd. Why? Well, the weekly is turning over, starting to go up in oversold territory. So we're going to have a weekly cycle coming soon. Yes, we're likely to go lower. What did I say to everyone in class a long time ago? I said, look for the pound yen to keep slingshotting lower and come to the cloud. It might even come a little bit lower, but I'm not looking for a new low. I'm looking for a higher low, higher high. Well, when are we ready to buy? When the weekly starts to hook, I'm going to buy and I'm going to be in it already. I've been in it, right? But that's the whole point, when it aligns the time frames. It's that simple, and there's no guesswork. I get a trigger, I see a hook, I go. Or, if that's not enough for you, let the trade management system do it itself. And I do it all the time. Majority of the trades you've seen were on the automated trade management system, entering and taking those trades. All right? So any other questions you have that we can address? Nothing to lose, everything to gain. Yep. And I can assure you, those of you that sign up for the 297, you'll learn more about trading in the first hour or two than the several days. And by the end of the month, it'll be well worth your 297.
You'll learn more than 297's worth
in the first minute, in the first class. There you go. My wife says you'll learn more of 297 worth in the first class. But I promise you, when we get to the nitty gritty and we're going to the time frames and we're going to the different platforms and we're telling about what's setting up, when's it setting up, when's the ideal time to go long, when's the ideal time to go short, what is expected, you learn very quickly, because whenever a weekly is down, you expect the daily will go down and then slingshot lower. Well, now that the weekly's getting deeper and deeper and deeper over, so sure, it could slingshot lower and we could still go lower, but we're going to start to see a bounce. So when do I take these Fibbo retracements we discussed seriously? After the hook. So I'm not going to take a potential weekly retracement into the sweet spot seriously until the weekly first starts to hook, right? Well, oops, that's the wrong one. That's another Fibbo. Let me delete that. Let me grab my little box here. Here's the area gold is supposed to retrace to. All right? Swing point high, swing point low. But we don't have the hook and we don't have a cross. So because we haven't hooked yet, we could keep slingshotting down, right? And this could go lower. That's okay. What if it does? Then I just take my Fibbo and I follow it lower. So once I finally get the hook, that's the swing point low I want to operate from. Once it's hooked, that will be the swing point. Well, what if this is the swing point already? Then when it hooks, I'll use that low as the swing point. If it goes lower before it hooks, then I'll just follow it, and then I'm going to use this as a sweet spot location. Once it hooks, we have a high affinity for the sweet spot. Once it hooks and crosses, we have an extremely high probability outcome that it's going to not go straight up, but stair step its way into the sweet spot. And we do that all the time. Let me show you one of these that we recently called, and it was so accurate, it was as if I read the future. And that is, where is that currency pair? Let's see. It's in the other platform. One second. I'll pull that up, but I'll show you exactly the same thing. And again, I don't care if you're trading Forex, futures, commodities, ETFs, bonds, whatever you're trading. Oh, I know what I can pull up for you. GDX. GDX is one that is getting closer and closer for a bounce. It's been browbeaten, slingshotting lower and lower and lower, just like gold. Notice the 4 hours oversold. Notice the 1 hour's oversold. Notice the weekly's getting oversold. Notice the monthly is getting near oversold territory. So yes, we could go lower, but the bias is with GDX is not to go on and make new lows again, to make a higher low, higher high long term. I'm not talking intraday or a few days or even a month. We're talking years that going to bounce and start making some new highs. What? When the markets implode and everybody runs to gold, silver, etc. for a safe haven. And the markets will implode. I think Europe and Asia are probably going to implode first, then the US. They still might be in 2019, maybe 2020. I don't care about that. I follow the cycles and I trade it accordingly. But I've been known to designate the day in a live webinar. I said the Dow's going down huge today. Be sure to sell the daylights out. It went down 1,000 pips that day. How did I know that in advance? The time frame alignment. It will literally blow your mind. All right, so GDX is another one that's getting deeply, deeply, deeply oversold, and we need to buy some bounces. Why? Because eventually we're going to start to bottom and reverse and start going higher. Up and until then, could we go lower? Yes. The weekly's still down, the monthly's down, the daily's oversold. So what can the daily do? Keep slingshotting lower and lower and lower. Well, when's that going to stop? We buy the hook, and when it hooks and crosses, notice this is a hook but no cross. A hook but no cross. A hook but no cross. See, it didn't cross. It didn't cross. It didn't cross. It didn't cross. That's another sign when it hooks and doesn't cross over together that it's going to slingshot back down. All this is explained in great detail. And GDX is going to be another one that's going to be needs to be in your portfolio. I wouldn't buy it for a weekly option and expect it's going to go up just a couple of days. We might go down a few more days. But long term, this baby is definitely going to reverse and go soaring higher. The time frames are aligning, and I can't wait for that to trigger and give me my entry. I'm looking to go long on GDX. Okay? All right, so again, it manages the start to finish. It manages the trade the whole time. This trade can run for hours, days, weeks, months, years. It runs until I either take profits, close it out, and notice in this one trade, take profit 1 was 38 pips, take profit 2 was 227, and we're up over 300 now more. So if I closed it right this second, I would have made 500, almost 600 pips on that one simple trade entry based on a cycle. Okay, so why GPA? We went through the process. Any other questions? This is all you need right here. Sign up before this link becomes inactive, because again, we do not offer monthly subscriptions year round. There are special occasions, and this is one of them. Okay. So with that, I'll say good night, good luck, God bless you, may the pips be with you. I'm humbled and honored to be your mentor and instructor. So we welcome you to join us. Remember, you're going to get the software and the classes. No, this is not a shutdown or a portion of the software that's active. You get every component at the $297 a month. So we hope to see you join us. And again, you join tonight, you can set those trades. Here they are for those of you that are interested, that are already signed up, which we have several. I'm very proud to see you're signing up and happy to be your mentor. But you can set up right here in that platform, and all you got to do is stay ready to trade. As long as I don't change time frames, we're good. It'll sit here for days, hours, weeks until it enters. And I can't tell you how many times I've done that, and I come back a week later and go, wow, I'm up huge. And I'm so confident in the gauges and the signs and symptoms of the cycling time frames that I trade it accordingly and I take profits accordingly. Well, we have it built in. When we're in a rally, we get profit triggers going up, and when you're in a downtrend, you get profit triggers telling you that we're getting deeply oversold. You need to start taking profits off. If not, then close it, scalp it up and then sell the slingshot. But this behavior, again, is anticipated in advance. This daily going from overbought to oversold and slingshotting lower and lower and lower and lower was absolutely anticipated months ago. Why? Because the monthly had started to turn over. Right? The monthly started to turn over months ago, and then the weekly was turning over. There's the monthly. We got a monthly hook and a cross. So months ago when we got the hook and a cross, what did that tell me? Everybody remember? So it doesn't matter currency, forex, futures, stocks, commodities, ETFs, bonds, you name it. Throw a stock in there, I don't care. Whatever you're interested in. Right? We got the Russell 2000. We have everything in here. You name it. It's all in there. All in there. Black Gold, Texas Tea, the Beverly Hillbillies, you name it. It's in there. All right. So as I'm closing, remember, sign up. Join us on Tuesday. Set the trade in that account. Once you download and install, take seconds to do it. You're good to go.
Posted the link again for those that asked for the link. There it is.
And we posted the link again for you. But again, if it's not hyperlinked, just simply copy the link and paste it into any browser and you'll get there. No problems. All right. So with that, I'll say good luck. God bless you. And we'll see you down the road. Take care. And for those of you that joined us, don't forget to join Tuesday's class for our Gary's Market Forecast starting on Tuesday morning at 8:30 a.m. See you then. Take care.